Let's put the spotlight then on KEI Industries. Talk a little bit more about the copper prices, which have dropped as demand has weakened. Is that aiding volumes? Let's understand then from Mr. Anil Gupta, Chairman Managing Director at KEI Industries. Thank you so much for taking time out. Let's begin by discussing volumes, because in the previous quarter, your volume growth had moderated due to the channel destocking, largely owing to the fall in copper prices. What is the trend looking at right now? Has the trend reversed? Have volumes picked up as the copper prices have continued to fall in Q1?
Good morning. Regarding volumes, definitely there is some impact in April and May because of the drop in copper prices. And the dealers are buying only as much as they are able to sell. So they're definitely, they are not stocking the goods. But as the copper price little stabilizes, I think the stocking will start, because dealers' counters or shops are almost empty now, and to meet the demand or to the customer, they have to buy. So we are seeing a better traction from end of May and now also.
So Anil, with the volatility in prices still continuing, what is the volume value growth that you're likely to see in FY24?
Our estimation is around 15 to 17% volume growth in FY24. And so far as value term is concerned, that will depend on how the commodity prices moves. But definitely we will be having 15 to 17% more volume compared to FY23.
Okay, so you're looking at 15 to 17% more volume growth. So in light of that, then can we extrapolate that to your overall revenue growth as well, talking about, that 16 to 17% range in FY24? Is that on track?
Yes. But I'm saying that it is for overall financial year. I mean, quarter on quarter, there may be some variation, but some quarter may be weak, but other quarters will be heavy, because we have very good order booking and a good traction of demand from the market.
But as we understand, Anil, that's actually lower than what you guided for in FY23 as well as 22. Why is that? Isn't demand environment improving?
No, I'm not guiding lower, but definitely demand position is improving in among all sectors. And I hope that even retail will also improve. It is only because of the little bit of fear in the minds of dealers that the copper prices may drop. So they are not stocking. That is the only reason. But cable demand is robust from industry and the infrastructure sector.
Okay, fair enough. What about the outlook when it comes to, your margin? Because you've guided for 10.5 to 11% margins, which is similar to what you've been doing for the past many years. But don't you think that the fall in copper prices will benefit your margins, and you are likely to see that raw material price pressure coming down? And when will we see your margins pick up from these current levels of 10.5 to 11%?
We definitely expect the margins to hover near 11%. I'm not giving better guidance, because so far as copper prices drop is concerned or metal prices drop is concerned, our strategy is to pass on the reduction in the prices to the customers whenever they go down, and whenever it is going up, we are definitely passing on the increased burden also as well. So we are very well, matching our sales order with our inventory, so that we don't have any loss on the inventory. This has been done in last 10 years very meticulously by us.
Okay, fair. That's the outlook coming in on margins. Now, post the receipt of the necessary approval in the US, are you seeing export traction from the US? What is your domestic versus export mix likely to be?
Our export is likely to be 12% of our total sales in this financial year. So that means there will be a substantial jump from last year. Close to 35 to 40% jump may be there. We have already started exports to United States, and expecting a very good volume in this financial year. Overall exports could be in the range of 800 to 900 crore rupees as per, or even more compared to as estimated by us at the moment. We have a very good order book at the moment from domestic as well as export markets.
Status on your capex, which you had outlined for the 800 crore rupee greenfield project, and by when can we see incremental revenue flowing in, and will the funding then be via internal accruals or debt?
We have lined up a capex of around 1,000 crore in these 3 financial years. It will be around 100 crores in the brownfield capex at our existing plants, which will be giving us continuously increased revenues starting from 3rd quarter of this year. And we have acquired a land near Ahmedabad, and there we are going to start the construction work by end of June. And that project will take around 18 to 19 months to come out with the first phase of production. That means 4th quarter of FY25. And by that time, the revenues will start coming up from there. So far as, capex funding from is there, it will be done completely from our internal accruals and without any debt.
What about your order book? What is the current order book standing at? And can you walk us through the FY24 guidance?
Current order book is approximately 37 or 3,800 crore rupees, and it is moving up. We normally are receiving 700 to 800 crore rupees order a month, and they are also executed simultaneously. In retail, there is no order book, so the orders comes and they are executed. So we don't count them in the order book at all.
Right. Okay, Mr. Gupta, great to have you on the show today. Thank you so much for taking the time out and speaking with us today on ET Now.
Thank you very much.